trying to think of a link between eyebrows and Stephen Carroll, but I just can't do it. So we'll just
How
go
cruel.
Tuesday. Well, I couldn't do it, so
eyebrows.
it's not cruel because I couldn't do it. Anyway, he's been looking at President Obama's comments on Brexit. No eyebrows jokes there either, and the market turmoil that we've seen since Friday.
But there were some raised eyebrows.
Oh, there you go.
The US president's
Well done.
comments. See, as he says, the UK's decision to leave the European Union raised longer-term concerns about global growth. Barack Obama pointed to a likely freeze in investment in Britain and across the EU as a result. The President's comments coming as the International Monetary Fund has warned of the effect that Brexit would have on Germany's economic growth. An IMF official says the fund is likely to cut its growth forecast for Europe's largest economy in the coming weeks. President Obama, meanwhile, has praised central bankers and finance ministers for how they've handled the turmoil.
We're monitoring very carefully whether there's any systemic strains on the system. And so far, what you've seen is reactions in the market, stock prices, currencies. But I think the preparations that were done by central banks and finance ministers, our Treasury Secretary, indicate the degree to which the global economy, in the short run, will hold steady.
So here's a Barack Obama. What's happening on the markets then, Stephen?
Asian shares continuing their recovery in trading today. We actually saw the London's FTSE 100 yesterday raise back above the level that it was before those huge falls we saw on Friday and Monday. So the market's very much in recovery mode. That's the picture a short time ago. The Hang Seng in Hong Kong leading the gains up by 1.75%. Investors also taking some comfort from President Obama's comments that the economy was stable in the short run. That's certainly the feeling that's bearing out on the markets anyway. On the currency markets, though, we're seeing the pound down again slightly against the dollar today, trading for about $1.33.5. Consider that the 30-year lows that it hit was $1.31 on Monday, but last Thursday it was trading at $1.49, so still well below the position that we had before the Brexit result.
Let's come back to France now. The President here has been making some promises. This, of course, ahead of elections next year.
François Hollande says he'll press ahead with plans for a tax cut to benefit the middle classes in the next year. Speaking to financial newspaper Les Echos, he said the tax cut would cost the state €2 billion, but that France would still manage to meet its budget deficit target of 2.7% next year. Now, that's despite a warning from France's public spending watchdog on Wednesday that the country was spending too much money on new initiatives, including financial help for farmers. Also, in that interview, President Hollande admitted the Brexit would have an effect on France's economy, and he said that France must adapt its rules, including on taxation, to make Paris more attractive for any of those banks that might want to leave London.
Another French story for you. Unions holding another round of talks with the government. This is over the controversial labour law reform plans here in France.
Of course, we've seen months of protests over this. Some of them have turned violent. The law would make changes to France's strict rules governing hiring and firing, making it easier for struggling companies to lay workers off. The Prime Minister met unions yesterday to discuss the outstanding issues in the bill, among them a change that would allow companies to negotiate directly with staff on issues like overtime and extended working hours. That's something that's currently done at an industry-wide level. This is a very hot-button issue for unions. Wednesday's meeting didn't yield much good news.
There are still fundamental disagreements on overtime, night work, part-time work and other points. So it's underway, but it's still not sufficient. We're not there yet. I've already said that I'm not hiding anything. It's just not sufficient for a positive end to this.
In the United States, the American branches of 2 European banks have failed stress tests by authorities. The US units of Santander and Deutsche Bank both failed the Federal Reserve assessments because of poor risk management and financial planning. It's the 3rd year in a row that the Spanish lender hasn't met the Fed standards. Santander has 670 branches in the United States and almost 10,000 employees.
Now, I mentioned this yesterday, a giant diamond. It's failed to sell, hasn't it?
Yes, this was the tennis ball-shaped diamond that we had been hoping would make at auction a rather large amount of money, but it turned out that nobody wanted to buy it, or at least not pay enough money for it. Yeah. They said that the bids went as high as $61 million for the 1,109 carat stone, but it fell short of the reserve price. Sotheby's had been hoping that it would go for more than 70 million. The head of the Lucara diamond company that found it said there was plenty of interest, but when it didn't sell, the company's shares fell by almost 15%. So investors not terribly impressed they weren't able to find a buyer.
I would have given them €20. They weren't interested.